Right now, there are 630,000 more sellers than buyers for homes in the US. This is a trend that's been going on for a while now. Let's find out why.
My name is Amy Rivera. I'm a top 1% Wesley Chapel realtor. And let me tell you why being right doesn't feel so great this time. Um, I pride myself on not only just knowing my market, but I am a numbers fanatic. That's just how my brain works. And numbers don't lie. So when it comes to my market, market statistics, absorption rate, days on market, average price, median, all the things that are going to dictate what is the most educated way to make decisions. Hi, Gigi. I know it because I run my own numbers. I don't depend on somebody else. I don't reiterate them from my brokerage. I don't cut and paste. I do it all on my own. And I made sure that I was an expert in my market because that's how you get empowered buyers and empowered sellers. Here's what I'm not excited about. Between 2021 and 2023, my particular market saw a huge influx of people and a real estate boom. I mean, I couldn't keep a house on the market if I tried for more than 12 to 24 hours. I was juggling 20 plus offers. I was being offered things that are like borderline illegal for someone to even buy a house. And while it seems like that would be a realtor's dream come true, the entire time in the back of my head I'm going, this is going to be a disaster.
And she still took their money. I bet you any money. Can't knock the hustle, but it's interesting that.
And I was right. And I'm not happy about that. Here's the deal. When you buy in above an appraisal price, or you're so willing in a hype market to pay as much as some people did, even if it appraised in that market, that appraisal value is not a constant. It's not like it has to build up from there.
I love the fact she said that. Some people are so beholden to the idea that real estate has to go up like a hockey stick. It's not always the case.
Consider it like the stock market. Stocks go up, stocks go down, depending on the volatility of the market, supply and demand, whatever the asset must be. Housing in my market then went through what we call a correction. We never crashed, right? I know all the news media outlets love to be like Florida's crashing. Nothing crashed. Stop it. My market did a soft correction and it has since kind of leveled out in its prices. The problem with that is that people that built or bought within 21 to 23 still bought in high.
Hmm.
And now, for one reason or another, I've had sellers who now need to move and the equity just isn't there and they're at a negative. So the short sale wave is coming. I'm hoping that it's not a significant wave. I want it to be like a bump. I don't want you to be able to surf it. I want you to be able to just like bobble over it. But we can't ignore that it exists. So if you are unfamiliar with short sales, if you are unfamiliar with pre foreclosure and foreclosure, I am going to implore you to get familiar with it because unfortunately, I'm seeing more and more sellers in a situation where they have to sell. They don't or can't be a landlord. Maybe the HOA rules prohibit them from being able to rent,
Hmm.
whatever the case may be. I'm dealing with some rentals, but I've now had multiple closings already where the seller has had to come up with money to satisfy the debt on the mortgage.
Damn. All in the middle of a cost of living crisis. This is crazy. I know the Fed likes to talk about inflation, inflation, inflation. That seems to be Jerome Powell's favorite word, but it's something that's affecting us all. And with that in mind, a few weeks back, they kept rates around 3.5 to 3.75%. In the short term future, it looks like if inflation persists, then they're not likely to cut rates. If anything, they'll hold them steady or increase them. In addition to that, she mentioned that 21 to 23 period. Not only did people overpay, they overpaid with expensive mortgages. So that's certainly coming back to bite a lot of folks. And that's one of the motivations for wanting to sell, just to get rid of something that is a cash loss. It's just burning through people's capital. And they're realizing the juice simply isn't worth the squeeze. Maybe they want to downsize. Maybe they just want to go back to renting somewhere. Who knows? But you're certainly seeing a lot of folks who bought between 21 and 23 trying to sell right now, and they can't. They can't shift it. But one of the primary reasons why is because of high interest rates. This clip does a good job of illustrating that point.
So here's the thing, even though oil prices seem completely unrelated to the housing market, in reality there's a lot more of a connection than most people think. For example, when oil is pushed above $100 a barrel and people pay more than $5 for a gallon of gas, investors demand higher returns on long-term bonds, which pushes up the yield of the 10-year treasury, and mortgage rates rise right alongside with it. This is why today the market has begun to price in the chance of a rate hike occurring as soon as April. And if this happens, affordability is fine. Alright, to put this into perspective, a 1% increase in mortgage rates generally reduces a buyer's purchasing power by 10%. So a $500,000 home at 6% would have the same affordability as a $450,000 home at 7%, suggesting that the higher mortgage rates go, the more home prices will need to fall to balance it out.
Agreed, and we are seeing a correction, but we may not see a drastic cut in prices because over 40% of Americans own their homes outright. This means they can hold onto their property, take it off the market, or just leave prices where they are. Remember, not everybody is pressed to sell their home. Some folks, however, do have expensive mortgages, particularly folks that got in between 21 and 23, in addition to overpaying for the home, and they may want to sell quickly. But having said that, we still have an issue. We've still got an affordability issue, as shown by this next clip.
No one can afford homes in the United States of America. I said what I said and I meant it. Let's start with how much the average home costs. As a 23-year-old, I'm considered a young adult. I do not have $400,000 lying around in my pocket, nor are any loan or approvers probably going to approve me because what? I'm 23 years old. A lot of you are probably saying, well, what about your job and how much do you make? That's besides the point, right? Because everyone is supposed to be able to afford a home in the United States of America, right? It's the American dream, the white picket fence, the kid. No, that's not the case no more. Y'all are lied to. I am so tired of being gaslit by our government, making it seem like we are the problem. So then tell me, why are interest rates so high on houses, right? Because that's your doing. The next thing is, let's talk about why the homes are so expensive besides the interest costs. The amount of money that it takes to build a home now is astronomical. And y'all's friend said he wanted to put tariffs on other countries. The material is already extremely expensive to build and no one can afford it. Not even builders can afford it. That's why the homes are so expensive. Now for people who already have their home and have already bought their home, that's great and that's nice and all for you that your prices are extremely high and that you probably purchased it for $99,000 and it's probably worth over $500,000, $600,000. That's really nice for y'all. But how about the people who want a house as well? Think not only about yourself, think about your kids or your grandchildren that may want a house in the future.
I hear that, and I hear his frustration. Having said that, not everything he mentioned is 100% valid. As it pertains to rates, they're usually market-led, and then, it trickles down into your mortgage, but I understand what he's saying. Home builder materials, them being expensive, hasn't got everything to do with tariffs, although tariffs do have a part to play. We've got to look at people who own land en masse and hoard land and refuse to build and slow down supply. But even those that do build, when they cut corners, we see what happens. So you don't necessarily want a cheap home with cheap materials. But notwithstanding, I do understand where you're coming from. Look, I think in your situation, especially for young people today, you have a few options. The first thing is to manage expectations, potentially downsize. You're not going to buy the home of your dreams as your first home. You're going to have to shift that expectation, potentially move to somewhere in the hood, or just buy a small studio or a one bed. You need to buy a place that you need, not what you want, especially in the first instance. So you may have to manage expectations. I'm sorry to break the bad news, but that may have to be the case. If you don't want to do that, you could also move to another state where it's cheaper or go to another country if you can work remote. So if you can earn USD, euros, or British pounds and live in an environment where it's cheaper, let's say Colombia, Philippines, Brazil, look into doing that. You don't have to stay in the US. You don't have to stay in the US. I'm somebody who's lived in multiple countries, including the US, and I can tell you, you don't have to live in the US. Your quality of life can be better outside of the US. I don't think you have to stay there. You don't have to. Another option is to simply earn more money and earn more money as quickly as possible. Now, I know that's difficult. Some of you are going to say, how? If I could, I would. I haven't got all the answers, but there are ways to do so. You may need to upskill. You may need to pivot industries. But the reality is, if you can earn more money quickly, then you have more options. And the last thing you can do is sit on the sideline and wait. Hopefully, there's a correction. Prices come down and you may be able to afford something. The only issue with that is prices coming down may be affected by employment prospects or people losing their jobs and having to sell their home. And if that happens, it's not necessarily indicative of a good market, because you may not be able to get a mortgage because you may not be employed or employable. So just be cognizant of that as well. Society is shifting at such a pace that we all have to be prepared for this new future. It is super uncertain, but you have got options. You have to think about what's best for you. But I think today, when this video is coming out, one of the best things you can do is think about how you can earn more money quickly, and you can think about managing expectations, potentially downsizing, moving to another place, not buying a dream home as your first home. Just some thoughts. In any case, it doesn't seem like the situation is going to get any better for sellers anyway. So prices ought to come down, and come down a lot more drastically. And then maybe this gentleman can get the home of his dreams. In any case, what will be interesting to know is what you guys think about this topic. Let me know down in the comments below. If you enjoyed this video, give it a thumbs up and subscribe to the channel if you haven't already. As always, I'll see you in the next one. Peace.